Welcome to our comprehensive analysis of Wipro Limited, traded as NSE Wipro. As we look towards 2026, Wipro stands at a critical juncture in the global IT services landscape. Historically known for its robust delivery models, the company is now aggressively pivoting to become a technology-first powerhouse. For VCs and angel partners, Wipro represents a legacy giant undergoing a massive transformation. With a market capitalization fluctuating around the $25 to $30 billion mark, the focus is no longer just on scale, but on high-value consulting and specialized digital services. In this session, we will break down the financial drivers, the AI 360 initiative, and why the next 24 months are pivotal for investors seeking a mix of stability and tech-driven upside. We are analyzing a firm that is currently streamlining its operations to reclaim its position among the top 3 Indian IT giants. To understand where Wipro is going in 2026, we must look at the hard numbers today. Wipro has maintained a steady revenue stream, hovering near $11 billion annually, but the goal for 2026 is an accelerated CAGR of 8 to 10% in constant currency. While the operating margins have seen pressure, stabilizing between 16 and 17%, the strategic roadmap targets a return to 18% plus EBIT margins through cost optimization and automation. For investors, the focus is on the order book. Total contract value, or TCV, has been resilient, with large deal bookings showing a 20%. The cornerstone of Wipro's 2026 outlook is the $1 billion investment in the AI 360 ecosystem. This isn't just a buzzword, it is a fundamental restructuring of their service delivery. Wipro is training its entire 250,000-strong workforce in AI fundamentals. By 2026, the company expects AI to be embedded in every single client solution, from cloud migration to cybersecurity. This move is designed to capture the growing demand for generative AI integration, which is projected to be a multi-billion-dollar market for IT services. For the investor, this represents a shift from labor-intensive billing to value-based IP-led revenue. Wipro's partnership with companies like NVIDIA and Microsoft further solidifies this position, creating a moat around their digital business that traditional competitors will find hard to bridge. In the highly competitive Indian IT sector, Wipro is often compared to TCS, Infosys, and HCL Tech. While TCS and Infosys lead in total volume, Wipro is carving out a niche in specific verticals like healthcare, BFSI, and energy. By 2026, Wipro aims to lead in the cloud-first transition, leveraging its acquisition of Capco to dominate the financial services consulting space. Currently, Wipro's valuation multiples are more attractive than its peers, trading at a price-to-earnings ratio that offers a significant margin of safety for new investors. As the company closes the growth gap with its competitors, we anticipate a re-rating of the stock. For VCs looking for an entry point into a mature firm with growth stock ambitions, Wipro's current valuation represents a compelling opportunistic play. Wipro has a long-standing reputation for being a shareholder-friendly company. For investors looking for capital protection, Wipro's history of consistent buybacks and dividend payouts is a major draw. Since 2016, the company has executed several multi-million-dollar buybacks, effectively returning cash to investors and improving earnings per share. Looking ahead to 2026, the management has signaled a commitment to maintaining a payout ratio of 45 to 50% of its net profits. This provides a yield floor for the stock, making it an attractive addition to a balanced portfolio. For VCs and angel partners, this indicates a disciplined capital allocation strategy, where the management is focused on both growth investments and rewarding the patient capital that stays with them through market cycles. As we project into the fiscal year 2026, our analysis suggests Wipro is positioned for a breakout phase. We anticipate the stock to reflect a more robust digital portfolio. Analyst consensus targets suggest a potential upside of 15 to 20% as the macro environment for IT spending stabilizes in the US and Europe. Wipro's heavy investment in cloud-native applications and cybersecurity is expected to yield higher margin contracts. By 2026, digital revenue is expected to constitute over 70% of total sales. For institutional investors, the key metric to watch will be the attrition rate, which has been trending downward, indicating a more stable and productive workforce. A stable workforce combined with AI-driven productivity gains could lead to a significant expansion in the bottom line, driving the stock to new all-time highs. No investment analysis is complete without a look at the risks. Wipro faces headwinds, including a potential slowdown in global tech spending and geopolitical shifts that could affect offshore delivery models. Additionally, the transition to AI requires high R&D expenditure, which could squeeze short-term margins. However, Wipro's mitigation strategy is sound. They are diversifying their geographic footprint, increasing local hiring in the US and Europe to reduce H-1B visa dependency. They are also moving toward fixed-price contracts to ensure revenue predictability. For a VC or angel partner, the risk-reward profile is balanced by Wipro's $4 billion cash reserve, which provides a massive cushion to weather any economic storm or to fund strategic acquisitions that can fill any technological gaps in their portfolio. In conclusion, Wipro Limited presents a compelling value growth hybrid opportunity for 2026. The company is successfully navigating its internal transformation, and its AI 360 strategy is beginning to bear fruit in terms of deal wins and operational efficiency. With an attractive valuation relative to its historical mean and its industry peers, the downside appears limited, while the upside remains significant as the IT sector enters its next growth cycle. For investors, VCs, and partners, the recommendation is a positive outlook with a focus on long-term accumulation. As Wipro redefines its identity in the age of AI, those who invest in the vision of a restructured, tech-heavy Wipro are likely to see substantial rewards. The 2026 horizon looks bright for NSE Wipro. Thank you for joining this analysis.